Everybody just getting ready for July's trading webinar. Live on YouTube and on the Zoom here. So let's just get everybody in and then we'll get going. Can you hear me okay, John? Where's the chat? Okay, thank you, Damien. Okay, give it a couple more minutes and then we'll get going, guys. Okay, let's get going. It's 6 p.m. my time, which is midday EST, in what is for some a holiday week. I know some friends of ours have gone from the US to Mexico for the week, July the 4th week. So I'm going to go through a few of the indicators, the new indicator Volatility Crusher, and answer any questions, but mainly just to make sure we go through some major points, if you like. So first of all, I'm going to look at a swing trading opportunity on LOGI on the Elliottwave indicator suite. I'm using the TradingView version here. One thing I want you to look at as well is one of the biggest things, and you should have a big sign on your trading wall, is look left. So one of the things I look at is these pivots here, where this A pivot and this C pivot on this harmonic pattern, is we need to join them up. Okay, that's a big strong support zone there, linear support and resistance. Look where the wave 4 came. Okay, not only did it test that, but the 55 EMA Cloud as well. Let's change that to yellow so we can see it a little bit better. In fact, yellow is the wrong colour because it's the same colour as that. We're going to have to go for a colour that's not there at the moment. So we're going to go for no. That'll have to do. Let's just change the opacity a bit. There we go. Okay, so looking left, support and resistance zones from these pivots. When a wave 4 does come back to test that linear support and resistance zone, and also the 55 EMA Cloud, which is a non-linear support and resistance zone, this is looking very good. We then got to look at the stochastics crossed over in the oversold zone. We've got to measure the Elliottwave oscillator to look at the behavior of this wave 4. Again, I repeat this and I do it every month and I do it on lots of videos, but it's good to practice, it's good to repeat, because you've got to do the same thing every time. You know, you don't try and reinvent the wheel, do the same thing each time. So we can use a Fib Retracement. We're going to go from the 0 up to the highest point of the wave 3. And that's how you measure that. And then just set your settings there to 90 and 140. That's it, 0.9 and 1.5. That's all you need. That has to crown between there. So right now we've got a great waveform behavior. It's standard profit taking pullback. We've got support at the linear support and resistance zone from looking left. We've got support at non-linear on the EMA Cloud, and we've found support in the amber zone for the pullback zones there. So there's an 80% probability it's going to go on and hit that 5th wave high. Brilliant. And then we've got to look about entry. I did enter this yesterday with my inner circle, 127.60. Gap down a bit today, but is recovering. Entry was reasonably sensible above all the highs of these candles here. So, and the stock just below the wave 4. That gives us a great risk reward of over 1 to 2 to that 5th wave target zone. So, but even by being conservative, we still got a decent risk to reward. So, you know, you risk I don't know, $10,000 here. There's a $20,000 payday plus going into there. So it's a good trade. We've got a while yet until earnings, 26th of July. Hopefully by that time we get some gap ups and we move and we can make it risk free at least, or decide to get out depending on where we are going into earnings there. So pretty standard. This is quite a gappy stock. One of the reasons why I went conservative on the entry yesterday, thinking if it does gap and run, we'll get in, but if not, I'll probably get in today. As it did, it triggered in yesterday, and we gapped down today, but it is recovering quite well. You'll see the colored candles on here. This is for volume behavior as well. I'm going to go through that a little bit on a different platform, but just to denote that a green candle is an up candle with high volume. A grey candle is an up candle with lower volume. A red candle is a down candle with higher volume than the previous candle. And then a cyan candle is a down volume with lowering volume. And we'll talk about volume behavior in a little while, because this is very good to both manage trade and also give you a little bit of confirmation when you get a signal, no matter what you're using to give you those signals. You need to understand behavior, and volume and price action together works out very, very well. And there is on our YouTube channel somewhere, actually, if Damien, if you could find it, there's a little video I did for the volume and price action together, the behavior. So we'll put that in the description of this on YouTube later on, because that's a really good little instructional video on how to combine volume and price action together. And one of the things, I always look at volume. It tells me a big story, and to color those candles in to give you that help really does aid you in understanding behavior, because at the end of the day, you know, successful traders understand behavior, and volume is one big part of that. Okay, so what we got going off now? So I've got an auto trade on TradeStation on MES at the moment. I'll bring that over. This is just the sim account at the moment, because I'm live and I don't show anything that's live on real accounts. But just go to show you that MES has triggered with a 5-star buy long auto trade. It's placed a stop in there. It's in about $57.50 at the moment. 2 contracts, auto trade. I don't have to be here for that to happen. It's all the auto traders are on, they're working. We've got an oil, there's no trade on that at the moment. We've got MES, which is a trade on. We've got ES. If this gets a 6-star buy, that could trigger as well. We've got MNQ, NQ. Okay, so we have those auto traders running 24 hours a day at the moment. Just one trading at the moment, and that's in profit right now. With TradeStation as well, while we're on here, we just that stock ticker was LOGI, I think. Well, I'm going to have to isolate on this. I think it was here, 433. Can't remember exactly where I isolated here. I don't use TradeStation very often. It's very difficult for me to get around it because I don't use it very often. Can't seem to move anything on the chart at the moment. Why is that? Ah. Okay. I need to practice more on TradeStation. I don't know if there's any TradeStation users here at the moment. So let's just go off that. I want to go to some of the other indicators. Well, the new indicators of Volatility Crusher, and which is pretty cool. It's from our partner Trading Indicators. They developed the Volatility Crusher, and now the Volatility Divergence Cloud, which we use as part of our bundles. But also now we've got this Volatility Crusher, which is great on, it could be, to be honest, I've trialed it on stocks on higher time frames, on Forex on lower, futures lower and higher. It's very, very good. One thing that I would suggest though is we look for the EMA Cloud if you're going to use the Volatility Crusher, because you need to use that to manage the trade. Sometimes the stops that this Volatility Crusher puts in is quite wide, the stops. Okay, so you just need to take that, and again, if you're looking for a long, you've got to make sure you're above the EMA Cloud. So this was a long on this little rectangle here. Managing that trade, 34 EMA would have taken out the trade at this point here. This was another long. Again, you've got to be safe here because that's where that EMA Cloud will take you out. This is the Ninja Trader version, Australian dollar, US dollar. It's just randomly picked. We've got great shorts here again using the EMA Cloud rather than this trailing stop position here, to keep a nice aggressive profit. This first one was the trade here coming down, keeps coming down there. That looks a little different on Trading View. If I go to this here, what are we on? Japanese yen futures. Let's go to gold, see what that looks like, and we'll go down some smaller time frames. Again, like any indicator, guys, you've got to find out which time frame is in the groove. To be honest, gold isn't very tradable at the moment. There's very, very little signals on a lot of stuff. Now, when we look at this, we can see some of these signals are good signals. Some of them are pretty poor signals. You've got to find out which time frame the Volatility Crusher is in the groove. Okay, and as I would advise is you need to put an EMA Cloud on there. Okay, perhaps a 34. Change that to 34. So what you're going to look at is the stops for these are very, very wide. Now, in this case, this would work out very, very well. These, we get 1, 2, 3 signals, and we carry that trade up. Now, I guarantee if we change that to maybe 55 or even 89, okay, we've got a nice tighter stop, and that works out very, very well there as well. So EMA Cloud is a good addition to the Volatility Crusher, as you can see. This short here was good, and again I'd look for squeezers. Again, this is not my indicator, third party, it's on globaltradingsoftware.com. It's a very good indicator, but an indicator is just gives you an indication. You're still big boys and girls, you still need to make decisions. And all I would say is the back testing I've done on this is these short squeeze boxes are better than these big boxes. You can see this failed this trade here. So when you get this smaller type box there with lots of price action in a narrow range, then when that volatility picks up, they're the trades that you're looking for. You won't take every single trade. You see, this is a smaller box profile than these here. So this is a lot of price action volatility in a very narrow range, so it looks to break out. So this is one of the things that I would look for when you are using this Volatility Crusher. Let's have a look at ES on futures on it, and then we'll look at a stock. So again, we get some great moves on this Volatility Crusher with smaller, concise moves with these boxes where the squeezing volatility pushes out. Very good. I mean, these are the stops. These are the profit targets, and they do hit at least profit target 1 on just about all the trades here. You see this, even this short here. The problem is entry. This recent short was fantastic on ES. This was during the European session this morning. Again, quite a narrow range on that box. Quite a lot of the volatility started still in that narrow range, and then it shot down massively, coming up to test that EMA Cloud right now. Okay, but it went through target 1 and 2 and just smashed down below. Really good looking good trade on ES. Now it's coming back up, and remember on ES on our Autotrader we are actually in a trade on that one. On the micro ES, that trade is still in profit, still doing well, and that's working out very well. That will start to adjust the stop soon, but that's moved back around that, and the Autotrader is designed around the xBratAlgo. Really, that's what it's for. Okay, sorry, just got down to that. So let's go back to stocks a minute. I want to use Volatility Crusher on stocks. I just want to see how it performs. So we're going to go to the daily time frame. I'm going to go to ALL. I'm going to put the Volatility Crusher on. Okay. So swing trading stocks. Again, weekly time frame here on the left, we can see we had a great fifth wave move, and it's hit that fifth wave target zone using the Elliottwave. We come down time frames then to the daily. I'm actually in now on a fifth wave move. I've got to isolate this, but I'm in that move right now. But then with the Volatility Crusher, picks up some great trades here. It's combinations here, really. I mean, this Gartley pattern on the daily on ALL found good support. The D pivot completed in the auto completion zone on the Harmonic. We then came back to test that completion zone, but then we got the Volatility Crusher saying go long. Okay, then we got the Divergence Cloud confirming that with a Volatility Divergence Cloud on this green arrow, and then you can see my favorite EMA clouds for the daily time frame on stocks: 55 in grey, 89. We had a nice move up, pulled back, found support. We got a 6-star buy on the xBrat here. Add to your position even more. Again, we now we get this big move up. We get Volatility Crusher saying this is boom, and it goes again. We then pull back. Now we've had this wave 4 pullback. I'm trading the fifth wave move. So you can see by combining lots of different indicators for different market conditions, a stock becomes more tradable more often, because you've got those different, I mean, some of them with the harmonic pattern was the start, backed up by the Volatility Crusher, and then that move was gone. It was good, it pulled back, it found support at the EMA Cloud, which, you know, it's one of the global trading softwares. You know, it's relatively cheap indicator, but it's fantastic for managing trades. Doesn't break down below the 89. Then I got a 6-star buy, add even more shares to this trade. Volatility Crusher comes in, gives me a big boost, goes again. We then have an orderly wave 4 pullback, and now I'm trading the 5th wave on an Elliottwave sequence. So again, you can't just rely on one indicator when you're trading stocks, and I'll tell you why. Because stocks move through different cycles. The same really with futures and forex, and there's different market conditions. And you know, xBrat is a different type of signal to the Volatility Crusher, which is a different type of signal to the Elliottwave. So they're different market conditions and different trades, and you need those different sort of conditions to give you those signals, so you can continually trade and continually make money. Because to be honest, trading is a business, and you need to be able to make money from a business. I'm just going to isolate this wave count down here. I think it's around about 6978. 6978. Okay, so there we are. So again, I'm gone back to my Elliottwave. So again with the ALL, there's been lots of opportunities with Auto Harmonic pattern to get us right in at the beginning of this bullish trend, which is usually the case. That was backed up by Volatility Crusher signal. It then pulled back. Then we got an xBratAlgo, which gave us that wave 3. Now we've pulled back on a wave 4. It's found support in this 89 EMA Cloud, started to move back up again. My entry was 131.28. I'm in this trade. I've got a target of around about $145 in that 5th wave target zone there. So there are multiple opportunities. You can't just rely on one thing. You can't be a one-trick pony. When you're trading stocks, futures, forex, crypto, anything like that, you need to be able to look at different market conditions and have the tools to get you in those trades. There's that 6-star buy that we talked about from the other chart. That was a great time to add more shares to this stock. Then there was an orderly profit taking. Then you add more shares at this point to trade that 5th wave move. So if you're investing, these particular indicator suites, whether it's the xBratAlgo, the Volatility Crusher, the Harmonic pattern indicator, the Elliottwave indicator suite, they will give you opportunities to add to that position that you've got. And when you're investing, that's important, because it may not all, you know, it may not drop and come down to lows, and you may not be able to average out and get a lower holding position. But if you've got signals from very, very strong indicators like Harmonics, Volatility Crusher, xBratAlgo, Elliottwave indicator suite, you're using a very simple indicator with the EMA Cloud to help you manage that trade and understand the behavior. And then we're going to go on to that volume behavior in a little while. You've got a package that works for you to continually trade, and that's what you're looking for. And I keep saying it because that's the job. You've got to keep repeating the same thing. So I'm going to go now to the Motivewave platform, and I'm going to discuss a couple of things. First of all, again, I wanted to look at the harmonic pattern. This is Baidu, a stock on the 4-hour time frame. Bear with me a minute. Again, every single platform has different ways of moving around the chart, and sometimes I forget. So, right. One of the biggest things with the harmonic pattern is that we only trade the resulting trade if it completes in the automated completion zone. I will repeat that again. We only trade the resulting trade if it completes in the automated completion zone. If it doesn't, we ignore it. Okay? The automated completion zone is a set of overlaps of Fib retracements, Fib extensions, okay, from this first initial ABC correction. So it gives you, there's 3, 4, maybe 5 sometimes different Fib extensions and retracements that you can measure. And where you get all those overlaps getting quite close, that's where we have that completion zone. If it completes out of there, then it's probably a low probability move. So this is a prime example. We get a back pattern form here, but it completes outside the completion zone. Look at the long trade, didn't work. We then had this Gartley pattern form, D pivot completed in that auto completion zone, boom, okay, and it's working. Follow the rules. I have made probably 60 videos on Harmonics. I've made 70 videos on xBrat. I've made hundreds of videos on Elliottwave. And I keep repeating the same friggin' rules every time. If you follow those rules, you will have a high probability trading strategy. You combine these, you will have a business, okay? And a little bit of a thing for you is that in the coming months, we will be starting a free live trade room. It's not me, it's one of the traders that basically he told me I've changed his life. Okay, he's watched all my videos over and over again. He's got the indicator suites. He gave up his job, he started trading full time, and he's making great money. He's going to be working with us in the coming months to put together a free trading room every day, and he's going to be using our indicators. Okay. And I will pop on every now and then when I've got time to come in and appear in there every now and then. But the main thing is now, I trust this guy because he has taken our indicator suites, he's taken our rules, and he's made it work for himself. Now he wants to work with us to help other traders use and combine our indicator suites to trade. And he wants to start this trade room. Okay, so I'm going to back him. I'm going to help him set it up, and I'm going to appear when I can. But that will be a free trade room used for globaltradingsoftware.com. So watch this space. Probably start after the summer, maybe before if we can get it all sorted out. But this will change the game for a lot of traders, because sometimes you don't feel like you know, if you're on your own, that you're trying to find reasons to get in a trade. If you're a trader full time, your job is to find reasons not to get in a trade. Okay, and that, it sounds a bit double Dutch, but actually that's your job. This is a reason on this back pattern completing out of the auto completion zone not to get in the trade. Okay, we don't have a reason not to get in this short because the Gartley pattern finishes in here. We start to get with our volume behavior candles. We're getting a down candle with increased volume. We're getting then a down candle with less volume, but then it increases again. Less volume, increases again, less volume, increases again. This is the point where we say we've got to go short. Okay, so you know, we use the EMA Cloud then. It's set to 34 at the moment. We're on the 4-hour time frame. That's probably about right. Break through that EMA Cloud. That's our short. 191.7 ish to 175. That is a great looking trade. Okay, and again, that's the reason to get in the trade. That's the reason not to get in trade, because it completes out of that completion zone. That's very, very important. Did I get the time wrong? All of a sudden people started appearing at past. Maybe maybe I got the time wrong. I started half an hour early maybe, I'm not sure. But anyway, welcome Vic, Peter, Mark, Keith, John, Hassan, Andrew and everybody else. Maybe I got the time wrong. I don't know. But the recording for this first half hour that I've done, yeah, will be available, and I'm live on YouTube, so once I've stopped, that recording will be available anyway. But for those that just turned up, big announcement: in the coming months we will be starting a daily live trade room for free for our users of our indicator suites, and it's not me, it's one of you guys that has made it. You've listened to me Right, okay. He's watched all my videos probably 10 times each. He's got the indicator suite, he's got the bundles, and he's making it work. He's gave up his job, he's trading full time, and you know, he says I've changed his life. So he wants to give back. He wants to be part of what we're doing with globaltradingsoftware.com. So hopefully we're going to get him set up, and he's going to be trading. It's not going to be hours and hours and hours and hours and hours. It's probably going to be pre-market and an hour or so into the trade, and then come back later on for the last hour or something like that. But we're going to get it sorted out, and I will be making appearances every now and then, just when I can, because I'm very busy being semi-retired at the moment. So I've just built a bar and a golf simulator at home in the garden, and I've got a software company, and I'm trading with my own circle, so I'm quite busy. But watch this space, watch the announcement, and hopefully you won't be alone trading our indicators anymore, because you'll join that trade room every single day, and you'll be able to invite friends and everybody else. So it'll be good. What we're going to try and do is get the technology so we can do it live on YouTube, because that will be awesome. Okay, so I just want to go through now the volume behavior candles, because these are very important. I'm not going to go through the theory. Damien will put a link in the description on the YouTube channel when we finished for the volume and price action lesson that I did. But I just want to go and talk about it very simple. It's a simple thing: accumulation, distribution, candles. But understanding that behavior, all the auto trade for MES is still doing well, guys. We're still $50 odd in profit on 2 contracts. Did good. So let's go through the key points. When we have a candle that has a volume, this is 1 minute, and then the next candle has more volume, we're accumulating more buyers. Okay. Conversely, when we are selling, we're distributing, we're getting rid of, whether it's futures contracts, whether it's shares or whatever it is, we're getting rid of, we're distributing. And then if we have more distribution on the next candle, that's increasing, that momentum is increasing to the downside. Also, we've got to understand when there's low volume up candles and low volume down candles, because that will help us managers with other tools like the EMA Cloud. That will help manage the trades as well. So it's not just giving you a signal to give you a backup to say, hey, this volume's starting to pick up now, this signal's good, I'm going to go. Also, is it running out of juice? Do we get the one candle wonders? And I want to take time here just to talk about one of the things I talk about is one candle wonders. So we're quite rangy on the left here, where we've got grey candles. We've got a spinning top here with grey. Then we've got a spinning top red. So we've got 2 up candles, low volume. And then we've got a high volume spinning top, 1 candle wonder. Then the next one is a low volume because it's cyan. And then we get 2 high volume spinning tops. So we're getting this. People want to buy, then people want to sell. Nobody really wants to push the price either way. Then we get 2 big distribution candles come down, but we reject. One of the big things here is we reject on that candle. Okay, we reject 50% at least, and then we're followed up by a candle with a spinning top again. Then all of a sudden we get green, cyan, cyan, green, grey, cyan, cyan. So we're still trying to fight our way. What's happening, going up or down? But then green, grey, green, green, green. So this is accumulation. We rest, accumulation. Now look at this resistance zone here. I've got to remember how to draw things on this Motivewave, so bear with me. Right, so I'm going to just put that on there, just close that a minute, and then I can adjust. So again, looking left with something I always do and I always advise to do. We can see we keep trying to push through this, okay, but we don't get more than 1 accumulation candle. We do here, but it doesn't push through. But all of a sudden now, accumulation, lower volume, accumulation, accumulation. It's pushing through this resistance. Then, you know, I'm not going to put any other indicators on with this right now. Just by trading this, you've got 3 accumulation candles on the trot. It's breaking resistance. Press buy. Okay? Then all of a sudden we've got 2 greys, but there's still higher highs, higher lows. 2 greens, momentum's still going. Now look at this little pullback, cyan. Look at the red candle. It's higher volume, it's distribution, but look at that. That's a 618 retracement. That's a hammerhead. That's a rejection of the low on high volume. Don't get out the trade. Then we get a higher volume again, but it's green. 50% retracement. Grey, green, grey. Look at the 1 candle wonder again on the red. Rejection of the lows on high volume. Stay in. Okay? Green, grey, green, grey, grey, green, green, green. It's still going. Now we're getting the top of a roller coaster and it's starting to think about coming back down. So we get a grey candle here, indecision. We get a cyan candle, which is a down candle, low volume. We get a 1 candle wonder, red, with a 382 retracement there by the looks of it. Then we get 2 cyan candles. Now, the 2 cyan candles, if there was a 3rd one there, I would get out. But as a lot of the cases is that is lower volume than this red, and then the next candle is even lower volume. Then we gap up to form a bullish harami. Okay? And it starts to build back up again. Now all of a sudden 2 accumulation candles. Then we get big candles, big price action, but low volume. Testing this resistance zone now. Okay, just here on the left, we needed that increased volume to push through. All of a sudden goes, but now we just start to run out of juice again. We get that indecision with a higher volume. We get cyan. All of a sudden there's no 1 candle wonder here now. We've got 2 candles, 2 red candles, increased volume, distribution. We've got selling. You need to get out. Okay, this is great. This is a 1 minute time frame. This is scalping. You just scalp on volume and price action. Yeah, I would probably have xBrat on there as well, and the EMA Cloud. But this then all of a sudden, what do? We start to turn back up again. Green, grey, grey, green, green, green. Okay, there is so many opportunities to understand behavior with this very, very simple tool. Very, very simple. That's Motivewave. Just to show you now, the MES Auto Trade on TradeStation is at $67.50 profit. Okay, so this automatically takes us in. So it's been back tested, it's been optimized, uses the xBratAlgo as an auto trading bot, and it's taken us in this long at this point. This is where the stop loss is at the moment, 4279. It will start to adjust that automatically when the market conditions are right. $70 profit now. Okay, still going. This is on the 15-minute time frame. Okay, so it won't change the trading stop until the 15-minute candle closes. Okay, so again, I only have that on sim because I don't show any live stuff while I'm on these. But again, my inner circle trade this, and I don't think Brian's in here today, but Brian has been religiously switching this on every single day. A month over month, he's 14% profit on his account balance just by using these auto traders on MES, MNQ and oil, and he just lets them run, does their thing. You've got to trust in the system. Hi Billy. Okay, yes, you've been trying the crypto bundle for quite a while now. Billy actually lives near me, so he's helped me with my bar and everything as well. So that's pretty cool. So every time he comes up, we chat and talk about the crypto bundle and everything like that. But so I think for trading stocks, I can't give you 2 or 3 because there's thousands and thousands of stocks, and it's very, very difficult to trade those stocks, I think, really using the bundle. But futures, I think oil's probably one of the biggest ones at the moment for me, because you're still getting some great price action here. And the Auto Trader is on the 5 minutes for oil, but again, it's about the time of the day. So you're in Europe, I know that, and you will get big sells like this 6-star sell here. So look at this time here, and I know, Vili, you like certain times of the day. So when we discussed it before, 11 AM European time, there's some great moves on crypto. Look at this move down on oil around about 11:15 AM. Look at the move down on oil today around about 14:15. So you know, it's not precise, it's not a window of opportunity, but there are some great opportunities with there. But one thing I would also, and I'm going to go through these 2 trades on the 5 minute on oil, okay, because this is important. So I've got the crypto trade. The crypto bundle is the same as the day trading bundle. So we've got xBratAlgo signals here. We've got a 5-star sell, and the Divergence Cloud is giving us confirmation at this point here. We look left. Where's a major pivot? Just here. Let's draw that on. I've got the right tool. So major pivot and support resistance is about there. Okay, we don't want to look too far left, okay, otherwise we'll never get in a trade. But this major pivot here is where we need to be. Now look at this. 5-star sell, Divergence Cloud, red arrow. That is the low of that candle. This is our entry below this low here. I'm just going to change, just going to put the stop on, then change that to green. There. So let's talk about this. Go green. So candle closes. It closes with the Divergence Cloud confirmation. Remember oil though, guys, it's $10 a tick. If it goes against you, you can lose $400 or $500. We'll work out the profit on this in a minute. Anyway, so the stop is just above the EMA Cloud for the signal candle, just here. Okay, so let's work this out. We've got, let's measure that. So we've got 47 ticks. That's a $470 risk there for 1 contract of oil. Okay, now 6-star sell comes in then again, and then the EMA Cloud is set on 13. That's a bit aggressive actually. Well, I must have been doing something different on there. We need that on 21. Okay, so now what we're looking for, we've got the entry. It's 10:35 AM European time. Okay, got the entry. It actually doesn't enter until around about 11:25. It comes back up to test the EMA Cloud, comes back down, we get the 6-star sell. Okay, then we push in. Then it comes to test the EMA Cloud, and look where it tests as well. That previous pivot zone that we've drawn on our chart. This is not freaky stuff, guys. This is trading. So then test the EMA Cloud. Remember, when we are managing this trade, we are looking for a close above the top of the EMA Cloud if we're going short. Okay, so this comes down. We're going now into the US session at this point here, coming down, coming down. Now finally we just get a close at this point here above the EMA Cloud. Okay, at that point there, let's change the color. Okay, that point there, let's measure that in tick size, that trade. So we risked $470, remember, if it took out the stop. That trade is 283 ticks, $2,850, that trade. Okay, remember, we're looking for reasons not to get in the trade. So when we want to go back and look at this. we've got support here. Okay, the thing is, we get signal, confirmation, entry. Our signal is a 5-star sell. A confirmation is on the same candle when it closes. The little red triangle here, that is our confirmation when this candle closes. That's our entry, one tick below the low of there. Okay, the stop is above here. There's no reasons not to get in this trade, so it's a good looking trade. We then follow the rules to manage it. It goes in, we look. First of all, we've got to make this risk-free. The only reason we make this risk-free is when we start to get the EMA Cloud high below that entry for the short. At this point here, on this candle here, where my cursor is, that's when the bottom of that EMA Cloud goes through the entry. That's the first time we move the stop. Not before, okay? The first time we move the stop. We've got a question. You can use Heikin-Ashi, or you're best using normal candles, but you can use Heikin-Ashi because, again, the volume is still the same for that time period. What it does is it takes the volume for that time period, for that candle time period, okay? So you can use Heikin-Ashi. So it doesn't matter, obviously we use Heikin-Ashi on the xBratAlgo, so this is why it's on this chart now. So putting the volume behavior on that chart will make no difference because it's the actual volume traded in that specific time frame. Does that answer your question? Okay. So we risked $470. We were risk-free. Sorry, 11.35. We're risk-free at 13.40. Took 2 hours to go risk-free, guys. You know, and then it runs, okay. And then we made a crap ton of money, okay, and it got out. Now we get a 5-star sell here. Anybody tell me the reason why we're not getting in that trade? I found a reason to not get in that trade. So in the chat, tell me the reason why we're not getting in that trade, because that's your job as a trader. Why are we not getting in this trade? So tell me in the chat on YouTube if you're watching, Billy, or obviously in the chat on Zoom. Tell me, what's the reason not to get in this 5-star sell here? Come on, no one's listening. Okay, one thing, okay, we've got a pivot point down here. That's not the reason, but thank you, Vic, for saying that. No Divergence Cloud, there's no confirmation, guys, okay? The pivot point, really, it's a fat one round here. There's still enough fresh air to go short, okay? But there's no Divergence Cloud, okay? That makes sense, Vic? That's the reason we don't get in that trade. Mark, once we have finalised things, an email will be going out and he will have a contact email address. You will have times when he's going live and all that sort of thing. Hi Mehmet on YouTube. So yes, you will be in contact with him and you will be able to talk to him, Mark, but just bear with us. Just talk to him yesterday. Yes, Keith, don't take 5 stars. Yeah, just take the 6 stars. Just, like my wife, she only takes the best. Okay, but look what happens on the next day. We get a 6-star sell. We get a very big candle though, but we get confirmation. So Where's our pivot? Our pivot is here from overnight. Yeah. You see how the this is about behavior now. So we got cyan candle, red, red, red. We got distribution, but that candle rejected in this overnight support. Very, very important here. Okay. It then came back up, but we do have an entry. We have an entry here. One tick below. Okay. So, but our risk could be quite high here, so let's just put that on there as well. And it really depends on your risk appetite and how you're going to go risk free. So what we're going to risk here, we're going to risk on this trade $1,800. Now, is that a reason for you not to take a trade? Somebody tell me. It's different for everybody, okay? For me, personally, it's not a massive risk, because this is the reason. We've come down to test the overnight support with distribution. It's failed, it's come back up. If I break that after it's tested the EMA Cloud and then starts to get a distribution candles again, so I'm looking at behavior here. Yes, there's an $1,800 risk, but guess what? I'm going to move that stock pretty quickly as soon as it's in above this resistance level. So all of a sudden now I've reduced my risk to $1,330, okay? Excuse me. Then we get this distribution, we move down, we get this pile driving move down, okay? We come to test the EMA Cloud, it fails and comes back down again. What do you do with your stop? Put it straight there, okay? Lock in profit, yeah? Then it comes to up to you close above the EMA Cloud here. That's where you take your profit. So it's not as sexy as the other trade, but using that volume behavior, we made $780. Not bad. Okay. There was a higher risk on that trade, but we understand behavior. We've got signal, we've got confirmation, we've got a rejection at the overnight support here. You say to yourself, and I talk to myself all the time, it comes back to test this, it starts to move back down again, then we get a red candle, a cyan, a red. This is going to break. We're getting more momentum to the downside. I'm going to go. But then I'm going to be aggressive with my trailing stop. Okay, I'm going to be risk free pretty damn quick. Okay, so on this candle here, okay, I'm risk free because the top of the EMA clouds come through the entry. We then get a test of the EMA Cloud and it comes back down again. I'm adjusting aggressively now. And then finally we close above the EMA Cloud and take the $780. Okay. We've got a question here. What asset would you trade if your account is IRA or 401k? Stocks and options have been my go-to assets because of that. Unless I am missing something. I assume your swing trading stocks is your answer, but want to also day trade these accounts too. Okay. So swing trading has always been my go-to for 20 years now, Vic, okay? And, you know, swing trading at the moment is pretty slow. These are positions I've got open at the moment. I've got PKI, that's in profit by about 40% profit times risk. Got HDB, it's in a bit of loss. Dada, bit of loss. MDB, in profit, about 30%. MVE, just back in profit today, going sideways. Amber, not in profit, it's in a slight bit of loss. ALL in profit. LOGI just coming back towards the entry, and I've got some more orders on there. So yes, swing trading is the way to go with your 401k or IRA. If you can day trade stocks, you've got to select the stocks you want to trade and you've got to keep an eye on them. It's like there's 6,000 odd stocks. You've got to find ones which are have lots of volume, lots of price action, lots of volatility. You've got to choose 5 stocks, and that's it. Okay. Now, there was a trade, Derek, on MES on the Autotrader, and it is in now, and it's in $105 profit for 2 contracts that I'm trading right now. Okay, so that triggered around about, I don't know what time that was actually, but that's the only auto trading at the moment on MES on an xBrat 5-star trade auto trade, and it's about $100 in profit for 2 contracts at the moment. Let me just clear that one, clear that one. Going to look at the Volatility Crusher again in a minute, Tamir, so don't worry. And again, if you're going to day trade a stock, you've got to think, are you going to trade options? So that's another strategy in itself. Or are you going to just trade flat shares? If you're going to trade flat shares, it's a very expensive stock, the way to go. Okay. So if I go to a relatively cheap stock, let's look at, no, not data. Okay, Twitter's cheap, cheap as chips. And then I'm going to go on the 5-minute time frame, and then I'm just going to see what works, what's in the groove, what's not in the groove. Okay. I can see harmonics appear quite a lot on the 5-minute. Actually, they work out pretty well. Wow, xBrat works very, very well when there's a massive move. But let's take those off a minute, because we're day trading. And I just want to put the Volatility Crusher on there a minute, because somebody's asked about the Volatility Crusher, so let's have a look. I'm not going to put the Volatility Crusher tunnel on at the moment, because you've got to see what's in the groove as well with any indicator that you're going to use. You've got to see what's in the groove. So where does the signal come in compared to where the end of the day is as well, because that's very, very important, because you don't want to be left in a trade overnight. So this Volatility Crusher signal here, for example, on the 5-minute time frame, you've got to look left. You wouldn't enter until you got to here, but we're getting to, you know, this is the close of the session. There's no trade there. The following day we don't get a Volatility Crusher. Where does the Volatility Crusher in here? Comes near the end of the session again. Okay, so for day trading stocks on Twitter, for example, is the Volatility Crusher the way to go? Probably not. What's it like on the 3-minute time frame, should you be asking yourself. If you're going to day trade stocks, you've got to find 5, and you've got to do the work. You've got to do the work to understand what's going off. And I would say the Volatility Crusher on these smaller time frames is not the indicator to use to trade Twitter in this case. Let's put xBratAlgo on. We're on the 3-minute at the moment. Divergence Cloud and the Harmonics. Whoops. And then I've got to find a time frame that's in the groove. That's a nice short, and that comes in about, well, less than an hour after the market's open on that 6-star. That 6-star buy is near the close. We would never take it unless it broke that support at 67.34. We get a decent, we've got a harmonic pattern there, but it completes outside of the zone. But then we get a 6-star buy, we get Divergence Cloud confirmation. That's about an hour after the market opens, and that continues to go down for the rest of the session. So fantastic trade there. Of course, if you'd have kept that in and that gap down there, you'd have been well in the money. But it's about finding the right time frame. Is it the 12-minute time frame? Is it the 1 minute time frame? Do you want to scalp? Okay. What's the 1 minute like on Twitter? That's not bad, actually. 1 minute's a bit too stressful for me with my high blood pressure. Let's have a look at Amazon on the 5 minute, because Vic, you day trades Amazon on the 5 minutes. We'll have a look at futures on the Volatility Crusher in a minute, Tamir. Sorry, I'm just going to go through this stock day trading at the moment. So we want 5 minute on Amazon. Nice 6-star buy this morning. Did you get in that one, Vic? Yeah, that was a great trade. So in this case, your Divergence Cloud comes before your signal, okay? And that happens. But your entry then has got to be above the signal candle. So your entry for Amazon, 3676.78. Stop. Signal candle just below the EMA Cloud there, okay? Your risk to reward so far today, again, looking left, big resistance up here, and it did hit it, okay? It's trying to get through it again. But your risk to reward, when you measure that, is 1 to 2 to that resistance zone. So great risk to reward, okay? Great risk to reward. But as soon as it hits that resistance zone, if you're trading, get out, okay? You've risked $1,000 there, you've won $2,000, get out. Great signal, great trade today, Vic. Hopefully, when we start this trade room, you'll come in and join in with the trade room as well and shout out some of those signals, because that was a great signal on Amazon today. And it'd be good if we get some people in there that are using the indicator suites but also trading options as well, so they can give their take on what types of options they're going to take on this particular trade, that sort of thing. So that'd be brilliant, and we'll get that community going. And hopefully, I've known Vic a long time, and Vic has you know, he started when we started just with the Elliottwave indicator suite, and he's worked through, he's trading full time, and the bundle is working for him as well. So maybe that not just one guy, but we get a couple of moderators in there as well, so we can start to build community and start to build that thing. And it's not just on stocks, it'll be on futures as well. So yeah, great trade today, Vic. Took the 6-star buy on Amazon. Great trade into that resistance zone there. Fantastic, well done. So we're going to go to Volatility Crusher on, I'm going to use oil as an example on futures. Okay, I'm going to take everything off except for EMA Cloud. In fact, I'm going to leave Divergence Cloud on a second and leave volume behavior on. Okay, let's see. So you gotta opt. Oh, wow. Okay. Right. So Tamir, which time zone are you in? Would you have taken this trade this morning during the European morning? Because that was a fantastic trade on oil coming out here. Divergence Cloud confirmation first. Volatility Crusher entry above this pivot from the overnight, and then it just goes. Okay, this trade was, I would go long there to the highs. That's $1,000 trade, okay, on the Volatility Crusher. Remember what I said though, we're looking for squeezers, we're not looking for football pitches, okay? That's one thing. If you get a football pitch with a Volatility Crusher, you don't take the trade, okay? There's no more trades there today. That was the trade today. That's not a football pitch, that's a tennis court. That's not bad. We gotta look left again. My mantra is to look left. Where's the support for oil? futures here, there. Okay. Volatility Crusher signal here. We've got support. You don't go short until you go through support. You don't short into support. So even though we get the signal here, our entry is below. But look, great. Come up to test the EMA Cloud. Again, using the EMA Cloud. You must have the EMA Cloud of Volatility Crusher. Pushes down, and then finally we just get above here. So we get this trade in, and this is probably 25 minutes before the US session opens. Okay, should be good, Mark. Yes, if there's enough people trading it, the micro oil, if there's enough people trading it. That's the problem. It needs volume for volatility. So again, I'm looking back on this. I've got a short here. I've got the Divergence Cloud confirmation. What time is that? Oh, we've got the US Open and it booms again. So one of the things you've got to look at when you're optimizing any strategy, whether it's Volatility Crusher, xBrat or anything, you've got to be aware of when markets open, because that can reverse a move. And we do have an indicator that trades those opens as well. It's called the market opening range, and it's really great for gold, oil and things like that. You can set it up. But if you get a short signal leading into the open of the US stock market, you don't take the frigging trade, okay? Because 9 times out of 10 it will reverse. If you've got a short signal going into the European stock market open, don't take it. This is futures trades, okay? If you've got a gold trade leading into the gold pit open, be very, very careful. If you've got a trade on Euro US dollar or 6E going into the gold pit open, don't take it, because those opens really do affect those futures contracts that they're connected to, okay? Oil's always going to react to ES. In the most part, obviously your indexes are going to are going to be affected by those opening ranges as well. So when you're back testing, you look at this and say, this trade was a failure. Actually, it did tip the first profit target, but the signal came in literally just around about the open of the US market, okay? If you're going to take it, you've got to be prepared. The first 15 minutes of that is very, very volatile, okay? And that reverse happened. Earlier in the day, was the long any good? It made money, okay? It's not brilliant. Again, the short here didn't make a lot of money, okay? The longs on the previous day made a crap ton of money, okay? Really good, great signals here. Again, the short, the smaller the box, it's like a squeeze. You get some great results from there, Tamir, for your futures on the Volatility Crusher. So CL on the 5 minutes, not bad. Let's have a look at NQ. I'm not really a fan of trading NQ, and probably a 15-minute would be better, although 5 minute looks good. But we've got football pitches again here compared to the the short here is fantastic. The long, we've got a big football pitch here, and this is why I say if you're going to take this, okay, the long efficiency is a 74%. So this is a good long trade according to the Volatility Crusher. We've got the signal at this point. We're going to look left. There's nothing. Well, we've got a bit of support here. Look left a little bit more. We're approaching that sort of zone now. What's up above? Oh, there's a bigger zone up above here. There. Okay. That's what I'm really looking at there. Okay, so Volatility Crusher signal here. Entry above that candle there. So we're at entry now. Okay. it's telling you that the stop loss is all the way down here. That's a football pitch. That's a massive risk. In reality, your initial stop is below the EMA Cloud. Now, that can change. You can change the EMA Cloud. At the moment, it's 21. Okay? You can be more aggressive with the 13. Okay? So if you're day trading, you can then be more aggressive, more aggressive, more aggressive, so your stops a lot closer. Okay? The likelihood is you will get taken out of very narrow stops, but your losses will be reduced compared to the big moves that you get, and you're looking for runners. And when you're trading futures, you are looking for runners. So if you can reduce those, if you're having those small losses each time, but then you get that runner, that's going to just blow your losses out of the water. So if I was using a Volatility Crusher to trade NQ today, I would take this signal. It's a football pitch type signal, so I've got to be careful. We've got a little bit of room. Work out the risk to reward. Where are we? So we're talking a 1 to 1.6 ish. Not bad. It's okay, but keep the tight stop. That's where it would be. We're at the entry now. Stop would be 1468650. Entry 14719. Okay, so that is 123 ticks. It's still a big trade. It's a big boy trade unless you're using micros. Okay, so finding the groove on the Volatility Crusher is like finding the groove on anything else. Is the 5 minute good for you? 15 minute probably more sensible. Take that away a second. So again, look at this short on the 15 minute. Huge move, great. Look back. Lock short, no good. Why was the short no good? Let's look left. Why was the reason not to enter that trade? We got support here. Okay, we got this support. You don't short into support. Okay, and then you get with the Divergence Cloud, you're getting a little red arrow pointing up saying divergence are coming close back together. Then your Divergence Cloud goes up. Then you get a Volatility Crusher long. Okay, and then where does that go into, that long? The US stock market open. You're not, you're literally, you're long, you're in profit, but then you've got the US stock market open. What are you going to do? Get out. Okay, so you've got to go back through the time frames and look at your win rates. I mean, great. I mean, to be honest, on NQ on the 15 minute, the ones in the European morning trades are a lot better on the Volatility Crusher by far. Absolutely. Another short there as well. European morning. Look for another European morning. That's not European morning, that's afternoon. That's a European morning short, works out pretty well. European morning long works out pretty well. So just by doing that little bit of back testing on the Volatility Crusher on NQ on the 15 minute, European morning are the trades on that time frame. So that's how you're going to optimize any indicator. And then you've got to decide, right, I can't trade the European morning. I live in the US. I'm not getting up in the middle of the night to trade that. I'm not trading the Volatility Crusher NQ on the 15 minute. I need a different time frame, so I'm going to look for that. Okay, so that's how you're going to do that. So I'm just going to go back. Somebody did ask how to measure the 535 pullback on the oscillator. So I'm going to do that now. Okay, I'm going to use PKM. Okay, so I'm going to use this example. This is a trade I'm in right now. Okay, I'm going to take the measurement off. I'm going to make this big. I'm going to go through really slowly. So when we're using the Elliottwave indicator suite, all the other rules apply. Wave force pullback. It's found non-linear support in this 55 EMA Cloud in the amber zone. We've got a false breakout stochastic We've got a pullback against that. It's crossed over in the oversold zone. Everything's looking really good. Okay, everything's looking really good. Now, 535 measurement. Let's take that off and let's measure it. So I'm going to use the tool, the Fib Retracement. Okay, Fib Retracement. Now, there's 2 clicks on a Fib Retracement. 2 clicks. The first click is on the 0 line of the oscillator. The second click is on the highest point of the oscillator during the wave 3. The highest point on the oscillator during the wave 3. Then on your settings you need 0.9, 1.4. Clear everything else off, set it to a template, and that measures the crowning of the wave 4 pullback and that behavior. So that wave 4, during that wave 4 pullback, should crown between 90 and 140%. No more, no less, in that zone. So in this particular case, I'm in this trade with my inner circle. Wave 4's pulled back, false breakout, stochastics pulled over the oversold zone. We've got 535 in there. We've got an 80% probability of hitting that 5th wave target zone. We entered this trade in May because it's on a weekly time frame and it's going okay. Okay, and that's how to do it. Hopefully, Keith, that helps you. Yeah. So again, it's about rules. Was there a reason for me to not get in that trade, anybody? No. I can tell you now, there was also on this previous shoulder a bit of a support and resistance zone, and look where the wave 4 came. There's your resistance. Look, 1, 2, 3, 4, 5, 6, 7, 8 weeks to try and push through there. Guess what? The wave 4 pullback comes and tests that zone. So that's linear support, non-linear with the EMA Cloud. We've got a fib support with the amber zone. We've got false breakout stochastic, we've got crossover, we've got 535. There's no reason for me to not get in that trade. There's no reason at all. So that's, I'm not saying it's perfect, but there was no reasons for me to not get in that trade. Okay, any more questions, guys, before I go? Again, we've done this live on YouTube, so when I finish it will be available, and we'll send emails out tomorrow to so everybody can watch the replay. We've done Elliottwave, we've done Volatility Crusher, we've done xBratAlgo, we've done the day trading stocks, we've done day trading futures, we've looked at the volume behavior. It's a very, very inexpensive tool. But again, this helps me here. I use it all the time. Look at this. I've got a wave 4 pullback. I need an entry, but I need some volume. Look at this big candle. Accumulation volume. Okay. Where's my risk reward? 1 to 1.5. It's on a weekly time frame. It's a good long-term move. I'm getting in. I'm managing this trade. These little pullbacks here were cyan candles, okay, lowering volume. Thank you, Vic. Then we increased volume the following week. No, sorry, price action, but then green. 2 accumulation weeks. Now we're hovering. We're probably waiting for earnings for another catalyst at the end of this month. Then we're going to go again. No problem, Keith. You're very, very welcome. So watch out for the emails in the next month or so for the live trading room, which will be daily, and you know, Vic will be in there. We've got another guy that's basically given up trading, given up work, trading full time because he's been using our trading bundles, and he's going to be running the trade room. And hopefully we'll get people like Vic in that's been with us for years and doing this full time, making money, and it will help everybody using the indicators. Oh, it's coming home, Keith. Yes. I've just spent $250 on booze today for Sunday night. I'm having a party. I've got my bar built in my garden, and we're having a big party for the final of the Euros, which I'm 52 years old and England's not been in a major final in my life. So I'm really, really looking forward to it. Yes, football's coming home. So have a great weekend, guys. Thank you for turning up. Watch out for the email tomorrow. Yes, it's been a long time, so I'm really, really looking forward to it. My wife was crying actually when we won last night, so it was quite emotional really for a lot of English fans. So we're big football fans and big Formula One fans. So yeah. Okay, guys, thank you for turning up, and watch out for the email tomorrow that will give you the link for the recording. Just look on the YouTube channel; it'll be there. So cheers, everybody. Take care. Okay, guys, on YouTube, I'm just about to, if I can remember how to do this, stop this session.